Okay, let's take it straight to our research team to help you with a list of top 10 stocks for the day and all that you should keep on your radar. Nigel, first up, NMDC is what you're looking at.
Well, that's right. We told our viewers yesterday that we're likely to see a price increase to the tune of from 200 to around 300 rupees. And when they reported for Chhattisgarh. That's why, in fact, it's mentioned that it's around a 200 price increase, both on lumps as well as fines. But I can confirm to you that in Karnataka, it's gone up by 300 rupees odd. So the reasons of the price increases are basically the steel mills, they're getting into the peak season. In the last quarter of the year, that's where we see the optimal production levels that take off. So that's point number one. Domestic steel production will ramp up. And the second factor is international iron ore prices, well, they have surged up on hopes that, in fact, the Chinese production will ramp up. And also inventory levels of iron out there are very, very low. So put all those factors together. We told you yesterday there's going to be a price increase. The management confirms later last evening itself that, yes, there's been a price increase. But let's hop across to Mangalam. He's tracking two interesting companies. One is Indian Hotels and Tilaknagar Industries. Mangalam, tell us the news space.
Well, for Indian Hotels, sources have told our colleague Rachna that there has been a data breach of almost 15 lakh users between 2014 to 2020 and that it is available on the dark web. However, at the same time, Indian Hotels has said that they've been made aware of someone claiming this possession of this data, and at the same time, none of this data is sensitive in nature, and since this data is of 2020, it's important to know what's happening now. As of now, there is no suggestion of any ongoing security issue or impact on business operations as well. So at best, maybe a mild red on account of sentiment negative, but no long-term investor would perhaps look to check out, largely because of this data breach between 2014 to 2020, of which the nature we're not totally aware of. Tilaknagar Industries is the other stock that I'm looking at. The promoter, Mr. Amit Dahanukar, has sold about 1.5% stake in the company. The reason for that is to revoke the pledge that is there on the equity shares of the promoters of the company. As of September, the promoter stakeholding was close to 42% and the pledge was close to 23.86%. What remains to be seen, however, is that in lieu of this 1.5% stake sale, how much is the pledge that has been revoked? If it's more than 1.5%, of course, the street will take it positively, and I see some green on Tilaknagar Industries. In any case, they have been taking efforts to clean the balance sheet up.
All right, Mangalam, thanks very much for that. Let's move on. RateGain and Prestige Estates are the two names which are in focus. Reema's got details. RateGain was down sharply, some 8% or so yesterday. Take it away, Reema.
Well, SocGen sold about 6.1 lakh shares yesterday, which is about half of the amount which was allotted to them in the QIP. So there were many marquee investors who participated in RateGain's 600 crore QIP. Of that, one of them was SocGen, and they were allotted 12.79 lakh shares, and they seem to have sold about half of that yesterday. But remember, even after despite the 8% fall that we had, the stock still closed above the QIP price of 643. Prestige Estate has launched a new residential project in Bangalore, in the heart of Bangalore City, Whitefield, called Prestige Glenbrook. The overall revenue potential is about 550 crore. They're looking to construct 2 towers, high-rise towers, and sell a total of 285 flats. Back to you.
Okay, thanks a lot for that, Reema. Well, let's go across to Abhishek now. He has some stocks that are in the news this morning. Abhishek, what are you looking at?
Well, Sonia, to begin with, Apar Industries, they have launched a QIP. So issue size is about 1,000 crore is the indicative price being at 5,264 per share. So this indicative price is about 7.5% discount to yesterday's closing price and 5% discount to SEBI floor price as well. The bankers are ICICI Securities and others. The use of proceeds is for the funding of working capital requirements that they have. Union Bank of India, there has been credit rating upgrade by ICRA. Now it is a AAA rated entity from AA rating earlier. The outlook has been revised to stable from positive. So this has taken place on Tier 2 bonds of Union Bank of India. Home First Finance, we saw blocks worth about 753 crore in trade yesterday. The sellers are True North Fund, Orange Clove Investment, which is a Warburg Pincus affiliate, Ather Mauritius Limited, while the buyers are Small Cap World Fund and Fidelity Global Investment Fund as well. Back to you.
All right, thanks a lot for that, Abhishek. Well, let's hop across to Upasana. She's here to tell us about some more stocks that are in the news. Morning, Upasana.
Well, Siemens has received service tax demand notice of almost 24 crores, and the order has alleged that the company has short paid liability of service tax relating to variance in values disclosed in the financial statements and service tax returns during financial year 8 and 9, 10 and 11, and 11 and 12. Well, the company has also indicated that it is seeking appropriate legal remedy in order to contest the demand notice. Well, moving forward towards Lupin, it has received tentative approval from US FDA for Canagi frozen tablets, which is typically used to treat type 2 diabetes patients. Well, this product will be manufactured at Lupin's Pithampur facility in India, and the estimated annual sales is about $561 million in the US market.
Thanks a lot, Upasana, for that. Here's a quick recap. Stocks with positive news flow. There's NMDC, Tilaknagar Industries, Prestige Estates, Union Bank, Home First Finance and Lupin. While stocks with negative news flow, Indian Hotels, RateGain Travel, Apar Industries and Siemens. Let's go across to Hormus, who joins in every morning to give you the latest that brokerages have put out in terms of their notes. He goes through all of them for us very helpfully. Hormus, good morning. What are you looking at?
Morning, Sonia. And a couple of interesting notes that I have for you today. And there is starting off with the top nifty loser of Thursday, and that is Cipla, where Investec has come out with a note. It has a buy rating. It has a price target of 1450. And remember, Cipla fell almost 7% on Thursday. And it is this sharp price correction that Investec is advising investors to utilize as an opportunity to buy the stock. Now, as of now, the brokerage does not see any impact on estimates for Cipla, and that the probability of an import alert to that Pithampur unit is also low. But they are saying that in case the facility does get issued an import alert, the exemptions and the alternate facilities to albuterol should minimize that impact to less than 5% of Cipla's FY26 EPS estimates. Next up is Morgan Stanley, which is overweight on Zomato with a 140 rupee target. They are quoting from an AlphaWise survey where they are saying that there is strong growth potential for Zomato to take market share from alternate channels, and they also say that they also spoke about Blinkit's leadership position in the market. But Morgan Stanley is seeing more upside for Zomato even after the recent outperformance of the stock, as they expect quick commerce to surprise on the upside. Now remember, Zomato shares are up nearly 90% year to date. And lastly, Morgan Stanley is also coming out with a note on Avenue Supermarts, where they say that a recent survey is highlighting a rising preference towards online grocery shopping, but they are saying that there is a sufficient enough market for online, offline and quick delivery to coexist. Now, DMart as a stock has not done much this year. It's down 5%, but its profitability keeps Morgan Stanley excited on the stock and the business, on which it is overweight, and a price target of 44.71. Back to you.
Thanks a lot for that, Hormus. Always on the ball. Thanks so much for giving us those brokerage updates. Well, for the time being, let's turn our attention to the commodity markets. Manisha Gupta joins us to tell us what transpired out there overnight. Morning, Manisha.
Morning, and thank you for that, Nigel. Well, I'll start with the crude oil prices, where we are looking at steady moves around that $80-81 mark. But having said that, it still is headed for a weekly decline. This is after OPEC and allies have postponed their meeting to 30th of November because of dispute among them. And it is basically the African countries like Nigeria, Angola, which are aiming at higher oil output. So that is what the street will watch out for. The U.S. record output inventory is gaining further this week as well, also seems to be weighing on. And then you also have seen the European zone business activity decline in the month of November. That's weighing on. In the metal space, we are headed for a weekly gain here. So whether it's about gold prices trading around $2,000 an ounce, or copper prices, which are headed for a second weekly gain, trading above $8,400 a ton, it is about firm yuan that is supporting China buying, and various small stimulus measures coming in from China also has been supportive. So whether it's for copper, steel, iron ore, aluminum, zinc, all of these metals are headed for a weekly gain for this one.
All right, Manisha, thanks very much for that. We'll take a very quick commercial break here. Up next, Pramod Amte of InCred Capital will join in to discuss what InCred's view is overall market-wise, and of course, what stocks and sectors they like and what they don't. Stay with us.